Hey guys, so quick trade breakdown. Today's Tuesday. I was already recording this breakdown because I'm on my iPad, but I was not recording my voice. So once again doing this again, just have to do it. But yes, today was not really an easy trading day, but I was able to manage this really clean setup right there. So 2-to-1 risk reward and really a clean trade. So only one trade today, and we're going over that right now. So let's start with the higher time frame. So daily conditions, as you know, not really easy today because we have this huge higher time frame gap. So new day opening gap, trading aggressively to the upside. I don't know if that's just manipulation and if we are really still in this trading conditions, but still nevertheless we do not want to trade against the high time frame, so we just have to adapt. From there, let's drop to a hourly chart. So as you can see right there, what's important to me is basically the triple top. And so I think with that we can already drop even lower. So Asia highs basically got swept right there. Also Asia lows and London lows are basically our low of the day. What's really important if we are in trading conditions, because with that we want to see that we basically leave London lows intact if we're really bullish. New open kill zones has liquidity important because we are right in advance of or right at midnight opening price. As you see, 8:30, 9:30 opening price, relatively high or above the midnight opening price. So not really easy to basically buy in discount if you're looking for longs. Right here we have regular trading hours, new open range gap. So really difficult today. Why? Because we have a huge trending new open range gap. So I think 300 handles, something like that. And in that case, because we are really bullish, also regarding the high time frame, I do not really want to see that we even completely close in the gap. But but wait, as you can see right here, 340 handles, something around that. So then I want to see that we basically trade back to the upper quadrant level, and from there on basically see a nice reaction, and we're going to trade higher. So that's the S right there, and that's actually, sorry guys, really important to me. So because we had basically SMT in play with London lows, in that case really confirming basically my bullish bias. In that case, SMT is really important, because then we are really content, or we are basically convinced that our low is basically in, and that's what we got right there. So SMT with London lows, also with New York open kill zones has liquidity. So I think with that we can drop to the 1 minute chart and talk about the execution. So as you know, if you're in really bullish conditions, I want to see that we basically trade lower with the 9:30 opening price, with the opening basically that we see some manipulation to the downside, and from there on trade higher. At best, we are also trending back to the upper quadrant level of the new open range gap. In that case, we fell short of it, but because we're really bullish, especially regarding the high time frame, I think that's still okay. Also, because we had SMT being in play, that's perfect. So with 9:30, we traded higher, scrapped new open kill zone by liquidity and traded lower. And right there, we basically stopped right in advance of the midnight opening price, and also new open kill zone has liquidity. So I'm not really content with that. You look for longs already, because we're also really early, 9:35. So definitely not in my 10 a.m. macro window where I want to trade. And definitely, as you know, we don't want to look for shorts. We don't want to trade against the high time frame, even if it's maybe manipulation. But we don't want to trade against it, and we don't want to trade aligned with the 9:30 manipulation to the downside. So we want to trade against it. We want to look for longs. In that case, to enter was not really easy. So basically, we already saw this really aggressive reaction. Also with ES sweeping London lows, and with the SMT being in play. So from there we already aggressively traded higher. So I was looking at the 9:30 wick, why 9:30 wick? Because it's just the most important PD array in that case. It's just way larger than every other PD array in that case, every other fair gap. It's just way more important, the wick, to regard that, how we trade there. And as you see, we completely aggressively closed above CE, and therefore I wanted to look how we trade there. Why I'm content with entering this high in premium basically at, you could say, external buy-sell liquidity. In that case, it's not really external buy-sell liquidity because we are definitely in this market maker buy model, and I want to see that we sweep higher time frame external buy-sell liquidity. So the triple top right there especially, and therefore, as you can see right here, we had 2 down close candles right there with the opening, or right in advance of the opening, 5 minutes before and 5 minutes after. So 2 down close candles, and from there on, we basically instantly saw a aggressive body to the upside, which closed, as you can see right there, above the 930 wick. In that case, we're really in bullish conditions. We have really bullish order flow. We have SMT being in play. We are trading aligned with the high time frame. So I regard the prices right there basically as a balanced price range. I don't want to see that we trade back to it. So therefore, I really just drop to the 1 minute chart and regard how we trade at the 930 wick. And as you can see, we also closed above it on the 1 minute chart, obviously. And from there, the next candle opens up, closes basically before the lower quadrant. Then the next candle opens up. We trade back to the lower quadrant, trade also into the really small fair gap, and already trade higher from there. That's where I enter, and I'm content with that because I'm expecting higher prices aligned with the higher time frame. Where did I took my partials at the event horizon, and a bit higher because trading view was a bit laggy today. But I mean, that's okay. I'm really content with that. Perfect 2-to-1 risk reward in that case. And we do not really expect that we reach probably the high time frame external buy-sell liquidity already from there. Why? Because we just traded from the midnight opening basically. So from the low of the 930 manipulation to the upside with no 5-minute retracement. So as you can see right here, only up prices to the upside, and from there on, this huge wick, this 5-minute retracement basically appeared, and that's what we kind of expect. So we don't really want to be part of that. So I'm also content with trailing my stop really tight in that case, because with that, I'm kind of not missing out on basically booking my second partial, because it's likely that a 5-minute retracement is going to appear. And but if we're really in bullish conditions, if we're really close to the external buy-sell liquidity, if we just in really bullish order flow, I don't want to see that we see a aggressive retracement, or I don't want to be part of it. So I expect the fair gaps to stay basically unfilled, to get treated as a breakaway gap. And so therefore, perfect money management. Not really easy conditions today, but still a really clean continuation trade perfectly. So that's basically it. So traded on my iPad today was not really easy to switch between the tabs, as you know, regular trading hours, yes, and I don't know, higher time frame chart, but kind of managed. I think for trading, or for like taking only 1 or 2 trades a day for really clean conditions, it's definitely possible to trade on an iPad, but it's definitely not easy to maintain basically a good overview. But I think I managed quite well, so I'm really content with that, how I did it today. And I think that's also quite important for the future. But I don't know how much I will trade this week or next week. So hope you enjoyed it, hope you learned something new, and safe trading.